what we find, and crypto will do this a lot, it will diverge from liquidity enormously because that's the bull cycle. That's when adoption goes through the roof and speculation goes through the roof, and you get the massive outperformance versus liquidity. If it doesn't, then it's not going to outperform the balance sheet. Remember that, right? So we're expecting to see that phase.
Real Vision CEO Raoul gives us his updated prediction for crypto and what will be the biggest investment opportunities in 2023. Powell predicts that the highly anticipated crypto summer, characterized by a surge in prices and exceptional performance of cryptocurrencies, has just begun. He also discusses how this recent surge will be affected by central banks and the debasement of currency we're seeing now. Powell suggests that the current market resembles 2008, or what he called the Great Reset, when interest rates plummeted globally, allowed for a resetting of debt payments. Consequently, government debts became concentrated within the 3 to 5 year sector, introducing cyclical patterns into the economy, which he believes will only be a positive for Bitcoin, Ethereum, and cryptocurrency across the board. Powell predicts another surge in debasement soon, potentially surpassing $12 trillion. This will force central banks to resort to printing more money to service their debts, and only increase the value of crypto and investors' trust in a new form of money. Let's get right into the latest interview with Raoul Powell, as he gives his latest updated prediction for crypto and where we're headed in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here. Let's get right into the video.
My hypothesis, and you've heard me talk about the everything code, is that debasement of currency is the main driver of asset prices globally. Currencies are getting debased by excess printing. We all know this from crypto, that if you have too much inflation in your money supply of a token, it tends to go down a lot. And that's the same with currencies. But all of fiat currency is being debased, and that's driving the reserve currency of the dollar to get debased against asset prices. So optically, it makes things like the S&P 500, property prices, gold prices go up. But once you divide them by the debasement, or even just use the Fed balance sheet as an easy approximation, what they tend to do is operate in line with the debasement. They're just holding water. They're not making you wealthier. There's not much of an investment. It's kind of like a bond of old. But I found in my work that two things really outperformed: technology and crypto, because they've got secular adoption cycles too. Okay, so where are we in the liquidity cycle? You see a lot of noise on Twitter because everyone's starting to pick up about this liquidity. Again, I'm using liquidity here as a proxy for debasement, not just pure liquidity. I think that's less relevant. So the GMI weekly liquidity index, year on year, bottomed exactly when ETH bottomed in June. That was the first signal to me that something has changed. So that got me focused on buying ETH. Then we saw the non-confirmation of ETH when Bitcoin bottomed in November. That was really interesting to me. And that coincided with ongoing increase in liquidity. If you remember, it started with the Bank of Japan. They started printing money to buy JGBs in a process called yield curve control, expanding their balance sheet significantly. That was then followed by the Bank of England, who expanded their balance sheet to try and bail out some of the pension system and also kind of stop their bond market getting out of control. The Chinese have been slowly debasing their own currency by a slow crawl of debasement. And then we saw the US come in March when they had to quickly inject money into the banks, which they've been drawing out again. Anyway, the trend is higher, but too many people get fixated on the next chart, which is the overall trend itself, not the rate of change, which is more important. But the overall trend, well, that is the same trend as most asset prices. And that's because debasement is lowering the denominator. So what we saw is that massive rise in liquidity that happened, or debasement that happened in 2020 and 2021, and that some of that got withdrawn. But we're back basically to the long-term trend, where we've been crawling for a while now. So we're not seeing a massive shrinkage in the balance sheets. We're seeing some expansion, which is what that previous chart showed you. So that's what's driving the market higher, much to everybody's chagrin.
Powell contends that the debasement of currencies, resulting from excessive printing, acts as the primary catalyst for global asset price inflation. This notion draws parallels to the behavior of cryptocurrencies, which experience significant value declines when their money supply becomes overly inflated. The devaluation of fiat currencies, including the US dollar as the reserve currency, against asset prices artificially inflates indicators like the S&P 500, property prices, and gold prices. However, Powell argues that once adjusted for debasement, these assets fail to generate substantial real wealth or substantial investment returns.
That is the chart of the balance sheet, which is in white, versus in gold, it's the interest payments on the debt, and it's lagged by 36 months or leads it by 36 months. What it's telling you is that for some reason, all interest payments from 36 months ago are being paid for by debasement. They basically put them on the Fed balance sheet in quantitative easing. So what is this all about? This is to do with the Great Reset. One thing that everybody expected was a Great Reset. Well, I've now realized it happened. It happened in 2008 when all rates went to zero globally. And that essentially allowed everybody to reset their debt payments. Okay, that's like a debt jubilee. You didn't forgive the whole debt, but you basically forgave the interest payments. And everybody rolled their debts 3 to 5 years. So now we have a concentration of all government debts around the world in this 3 to 5 year sector, which every 3 to 5 years gets rolled. And that is leading to a cyclicality in the economy, that it starts slowing down because the interest payments become due, the economy starts slowing down, and eventually the central banks monetize those interest payments from the previous cycle and roll over the debt. I'm expecting the same again, and that would give us this chart. So that, I think, is the big driver. The macro is the big driver. So when we zoom out, we look at the Bitcoin chart on a log scale, and you can see the trend rate of adoption over time. The acceleration is when the balance sheets start getting used and people start putting money into the space and the space grows over time. And we will see that ongoing. So the total crypto market cap hit 3 trillion at peak. What will it be at next peak? Probably 10 trillion. As more money comes in, more people stay in the system and opt out of the old system, or find new uses and applications in a Web3 world that makes the internet just better, fairer, and more democratized and more decentralized. But that trend rate of Bitcoin, well, we got in that beautiful cyclical low the buying opportunity we were all looking for. People are still arguing whether it's going to go lower, etc. The probability is it put in the lows and now we're on the upcycle. And it's what I think is the start of crypto spring. I think we've been through crypto spring and we're going to be moving into crypto summer.
Powell's analysis brings attention to the liquidity cycle as a valuable indicator for understanding debasement, signifying a shift in the market's direction. He identifies a crucial turning point in June, where his weekly liquidity index hit its lowest mark. This prompted him to focus on purchasing ethereum. Powell also acknowledges the divergence between liquidity and asset prices, emphasizing that during bull cycles driven by adoption and speculation, cryptocurrencies tend to outperform liquidity measures. Based on his findings, Raoul Powell strongly advocates for the strategic investment in cryptocurrencies, specifically highlighting Bitcoin and Ether as promising assets. He sees them as assets that surpass the performance of traditional financial institutions' balance sheets and provide a means of protection against currency debasement and the inherent flaws of the current financial system. What is your opinion on Raoul Powell's claim that investing in cryptocurrencies like Bitcoin and Ether serves as a smart hedge against currency debasement? Let us know in the comments below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.